So we know Lululemon is pissed about Costco because Costco is essentially undercutting their fancy $128 pants. It's worth understanding a little bit how Costco makes money, or how little money they make on actually selling products and where they make their big money. But apparently these culty Lululemon pants sell for around 128 bucks. And Lululemon is now pissed that Costco is basically selling a dupe for about $20. And the whole enterprise of Costco is upsetting the apple cart of premium businesses that like to have really thick, fancy margins. And so that's kind of where it's worth looking at Costco's financial strategy a little bit and understanding how they actually make money, and then how do they advertise around that, or maybe don't advertise around that. I'll explain. Take a look at this. So this is Costco's last earnings report. And what you'll find is they've got about $62 billion of sales in just a 3-month period, which is pretty impressive. If you exclude their membership fees, which let's just assume for a moment that the membership fees are basically 100% profit, with the exception of people sitting there selling the membership fees and the miscellaneous customer support for adjusting your membership and how you're going to pay and stuff. It's a pretty high margin product. It's, what is it, $5 or $6 a month or whatever. But their goal is to get as many people as possible into this membership, almost like a Netflix subscription. We want everybody to have it. And the benefit of everybody having it is a nearly pure margin product. And so how, of course, does Costco make money? Well, mostly this membership. Why? Well, because without the membership fees, so if I take this $2.5 billion of money right here that comes down to essentially the bottom line, these are the earnings before taxes right here. If we take that number and we subtract this $12.40 right here, we'll find out that Costco is really only operating at a 2.1% net margin, net of membership fees. So in other words, if it weren't for the membership fees, they're only making 2.1 cents for every dollar of product that they're selling. That is ridiculously low. Now, obviously, that's after their SG&A, their sales, general administration items. And what keeps Costco profitable, or actually a functional business, is that this high margin membership fee right here helps boost their cash flows and margins substantially. And they know this. So their goal is, hey, what can we do to basically get every American being a member of Costco? Well, what a better way than to sell products at a very low margin. And that's basically what Costco's premise is. And their promise to their customers is, hey, if you come shop at Costco, we'll pass on as much of the savings as we can to you. All we ask is that you pay to be a member of our club, so to speak, and that you don't sneak in because you say your mom and daddy are inside, and that you don't have a membership card and they sneak in. Although you can't check out anyway if you did sneak in without having a membership card. This is in contrast to a company like Lululemon. So Costco is trying to take this approach of, hey, we're going to provide quality products at the lowest margins possible. And again, all we ask is that you pay our high margin subscription fee, which honestly is relatively low anyway. If you then compare to what Lululemon does, you can see a little bit of a difference here. So Lulu here shows about $10.5 billion of revenues in the 12 months ending February 2025. Of those $10.5 billion in sales, they net $6.2 billion. Well, that's their gross profit. And if you go all the way to the bottom line, before their tax expense, they're bringing about $2.5 billion in a year down to the bottom, which, mind you, is exactly what Costco is bringing down, except in a quarter. See, Costco is bringing down $2.5 billion before taxes in a quarter, which means Costco is basically making about 4 times as much money as Lulu. But the big difference is Lulu has a margin here of about 25%, right? 2,576 divided by 10.588 that works out to about a 24.3% margin. So let me make sure I did that right. 2,576 divided by 10,588. Yeah, there we go. 24.3% margin, which is roughly 10 times the same margin that Costco has, that same line. See, Costco's only got a 2.1% margin on EBIT. So their EBIT margin, earnings before interest and taxes, actually, it's actually after interest because we've got interest right here. So their earnings before taxes, it should just be the EBT. Whatever, it's too confusing. Doesn't matter. The same line, earnings before taxes, in both cases, or a 10x difference in terms of margin. So for every dollar of product Costco sells you, they've got about 2.1 cents. Every dollar of products Lululemon sells you, they've got about 24 cents coming to that bottom line. The social point of view here is that Lulu is basically ripping people off, or they're selling a luxury brand or whatever. And Costco is trying to do the best good for the most amount of people at the lowest margins possible. This is one of the reasons why Costco doesn't care about keeping the prices of their hot dogs at $1.50, even if they end up losing money on those, because those hot dogs aren't the point. The hot dogs are, hey, join our club and you'll get $1.50 hot dogs. It's part of the marketing. It's part of the branding. We're trying to do a social good for people. That's Costco's messaging. And so now you see that Lulu is suing Costco for selling cheap knockoffs of the athleisure sort of quote unquote premium pants. And what's actually happening is more people are going to Costco to figure out what's going on with these pants. As the Wall Street Journal here says, the Lululemon lawsuit might just turn out to be free advertising for Costco, which is obviously the company's preferred form of advertising. After all, the press coverage of the lawsuit is how many shoppers who would never spend $128 on pants found out that their favorite company was selling a lookalike product at just $20. And now people go to Costco to look for their next great deal. And it makes sense. So when you look at the Kirkland brand, a lot of the Kirkland products are really, Costco isn't manufacturing these Kirkland products. Socks, shoes, glasses, underwear, for example, right here, that Kirkland now brands, or nuts or toothpaste or whatever. These are all likely just the same exact products that you get from the branded companies like Planters Nuts versus the Kirkland Nuts. They're probably all put together and bottled in the same factory. They've just got a different label slapped on them. One you pay for the brand in the bottle, and the other you pay for the Kirkland sort of discount cult, which is fantastic. So from a social good, Kirkland is doing a fantastic job at giving people access to products at the lowest margin possible. They actually say that they sell their branded products at no more than 14% above cost. They cost even more than 14% more, though, because some of that cost goes to the brand's profit. And Kirkland products are sold for about a markup of 15%, which is really, really low because this is your gross markup. So if you buy a Kirkland product for a 15% markup, compare that to a Lululemon product. Well, a Lululemon product, on the gross side, the cost of goods sold are $43 for every $158, let's call it. So 43 divided, that'd be 105.8. There we go. So if I just divide these into each other, 43.17, we're looking at about a 2.5x premium. So for every $100 of product, let's map this out so we can have some nice bottom lines here because it's easier to see. Okay. For every $100 of product, you buy at or for every $100 of product at Lulu, they sell it for $245. For every $100 of product at Costco, they sell it for $114 if branded, and then $115 if Kirkland. So you can see the difference there. Costco has a margin before taxes of 2.1%. Lulu has a margin before taxes of 24.3%. Right. So you can see the difference here. And I would argue that one of the reasons Costco is so popular, which is also why they're selling gold bars, this sort of gold bar idea, it's not about making money on the gold. It's about getting more members, right? I would argue Costco is probably your social good, right? This is great for society. Whereas, branded products, like a Lulu, are probably, more, how would you describe it? Like a, luxury kind of, groupie product, maybe like a Louis Vuitton or a Tiffany or whatever, something that's like, oh, look, I've got this expensive branded product. Because there is going to be I would imagine some aspect of people who are like, I don't want to walk around wearing stuff that says Kirkland on it. But the reality is, does it really matter? No, of course not. Generally, the things we value, like clothing, aren't actually that valuable. Very fascinating business model, though, from Costco. You should look at their cash flow, too. So let's see. If we go to their cash flow statement, here's their balance sheet. And cash flows should be here. Here we go. Statement of cash flows. So in the 30, so this is going to be, what is this? This is about 3/4. So in a 9-month period, Costco produces about $9.4 billion of cash flow, which means they produce about $1 billion a month of cash flow. And they invest about 1/3 of that into their facilities and their warehouses and their properties. Kind of, I think, probably explains why Costco stock does so well as well. I mean, clearly you've got some serious pricing power. Costco, in the last 5 years is up 200%. Although I do wonder how that compares to Lulu. Maybe Lulu's... I know during COVID, their stock exploded. So their 5-year chart could actually be pretty good. Nope. Wow. I was not expecting that. I mean, that's wow. So this is society voting. Over the last 5 years, although I guess this does take you back to the middle of COVID now. Over the last 5 years, Lululemon has lost 25% of their stock value, whereas Costco's up 200%. And then look at the lifetime. Costco up 13,000%. Obviously, Costco's been around since '85 as a public company, and Lulu only since 2007. But, I mean, you can see at every metric here, year to date, Costco's up 6%, Lulu's down 38%. No wonder Costco is outperforming. They're providing a great good for society. Good for them. Good for Costco, honestly. It's pretty impressive.
Why not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.